My face community, hello everyone, how are you? Patrick, same to you. ECB Day, Draghi saying, I don't know if I want to stop the QE too soon. BMW and Mercedes don't like it. How are you everyone? Okay, so we're in Greg's zone in cable right here. All right, could be a 1, 2, 3. I need a negative candle for the divergence to stay intact, need it to be under here. The other reason is, I think, just gut instinct that EG wants to pop here. Looks like we had a 3 drive on EG. Of course, everything can happen and anything can happen. Always have to be ready for everything in this business. But so far, it looks like we have a 3 drive. Is it going to head down again? I don't know. The last GB, okay. And also, you know, this was Greg's area for the pound. So I just want to show you guys some ForexAnalytix stuff here. Call me Freebie Dale today. So let's see what Candlestick is saying here. Steve Volge. Yeah, coming right off of 131, it gets her there. 78.6, 160, but 31.2 was 1.272. So Greg, I'm sure, still has the same count.
We just pushed
basic
technical analysis as well, chart.
Basic?
Yeah.
Okay. Oh, nice line. Cable is testing the ascending channel resistance right here. Okay, so plus, I don't know what this 14-day RSI. Anyway, I think if we get some type of recovery in EG and what's happening in cable, that it might be the short here. So we have some confluence with Steve's candlesticks, and as I showed yesterday, Greg's wave count was between 30, 80, I believe it was. Yeah, for the end of C, and then a big break. New lows is what he's looking for in the 4 hours. So that's a preferred short, and what makes it the preferred short is perhaps, you know, we peaked all the way up here, and you know, I missed it because it was a confirmed high in EG. But why can't we rally back to 92 and still have this be the top? All right, so anyway, we'll know for sure when Lydia Idem Finkley is here as our special guest. The Cable Queen will be here. Great day to have her here. Also, I want to tell everyone here, hiya, Ben. I spent an hour in Blake's private country club yesterday, and I've been in there this morning. It's a great environment, and I would say to people, say you're a year or two into your trading journey, I have a saying, surround yourself with traders better than you, because you'll rise to their level. Instead of staying with people at your own skill level, try and surround yourselves with people that you might be able to model yourself after, learn from. And the country club is something else. There's some great minds in there. We also laugh, just like we do for an hour and a half in here, only it goes all day long here in the States. And I don't know, I do sleep. I don't know what happens in there at night, but we'll have more details on that Tuesday. You could hear that room going off for me. I'll just spend a quick second with I told you so. Blake has coached me never to say I told you so, but I didn't do it anyway. But Steve and I were on the air talking about, well, first of all, I felt that all the Euro crosses were going to rally yesterday. They did. They're all running into resistance now. That's because it was risk on. Maybe the guppy needs to fill this gap. Still doesn't look too bad. Even Aussie yen, with Aussie acting good, you know, came out of here yesterday, so that was right. And then the one that was really just luck was this after Canada tightened. we were talking about it down here, saying that we had a shot for new highs in CAD yen. Steve concurred. We commiserated about it. If you caught it, you're very lucky. So we're approaching the old highs. We should break through the highs, you would think, right? So anyway, that was a big trade. And I've been looking at the metals in the face of the market rallying again. I look at silver, it's really diverging here. And if we are going to make a new all-time high, it was diverging here, was a 3 drive. So now we have 1 second lower high in silver. I'd be careful with longs in the metals right here, especially since, I don't know, Steve or Blake, if you've seen the COT, Commitment of Traders report is not constructive at all when it comes to the gold. You have commercials really piling on the shorts here, and you have the public real long, which is completely understandable after we broke out at 1300. But short term, you may want to have some caution. Could go rally up one more time, yes, but I don't think it'll confirm. And silver's been lagging, so obviously your preferred short's the weak sister, and silver's a weak sister.
You know, I hear what you're saying, Dale, but I can't physically can't, like, I look at gold where it's at above 1300 and it's trading at 1340.
Right.
I personally can't short it while it's above 1300.
I understand. I can't. Completely.
What I think is more likely, because the dollar has been obviously beat up so badly. I think what's more possible is a dollar recovery for whether it's a week or, you know, a few days or maybe 2 weeks or whatever, and and gold drifts back down to 1300. I'd be a buyer closer to 1300. I don't want to buy it here at 1340, but I can't deny that it's in breakout territory. So sure as hell don't want to be shorting it. So, you know, what I'm hoping is going to happen is I'm hoping the dollar gets, you know, maybe today is the day that does it with the ECB, that we get a little bit of a recovery in the dollar, allows the dollar to, you know, to regain its posture just a little bit, and then gold does pull back towards 1300. I would be a buyer at 1300. I know
not
even get that deep, like 1310, 1320, maybe all it gets back.
Maybe, I don't know. But I sure as heck don't want to short it. I mean, if I was long, I'd be a little cautious, obviously.
Yeah.
Excuse me. But I don't want to be. I don't want to be. I don't want to be initiating new longs up here. For all the reasons that you listed as well.
So if you were long, we would be taking some up here, wouldn't you?
You know, either that or I'd just be moving my stops up. It depends what your, you know, your time frame. I mean, if you're a gold bull and you're like, okay, over the next couple months, I expect it to go to 1500, then, you know, you might not be, you know, maybe you're just putting your stops to 1300 or 1290 or something. But if you're, I mean, if you're swing trading it, I mean, and you've been long for a couple of days, I'd probably be shaving some off here. I mean, there's so many ways to skin a cat in this market, and so many different trading strategies and styles. I never profess that the way that I do things is the right way to do things, because my life is a lot different than most people here. You know, I have the luxury of being in front of my computer 12-14 hours a day, where some people, you know, they listen to this webinar as they're putting on their boots to go to work, you know, and they don't have or they're in between, you know, taking their kids to and from school. It's not, you know, not one size fits all, for sure. And so, you know, it really depends more on your strategy. But I would say if I was a swing trader and you know, if I picked up gold, which I didn't, by the way, and I'm not long, so I really have no basis to talk about this. Here, I'll just take over the charts and I'll show you what I'm
buddy.
talking about.
I just noticed, though, Blake, that this pop in the euro took out that spike high on the NFP, and it's back underneath it. So that may have just been a little bit of a stop hunt there in euro as well.
Yeah, I think, well, we'll have to see what's in store for the euro here in the next 20 minutes, and I'll be here at least for the first few minutes of this press conference. But usually it's going to be, it'll probably be as we get into your interview and or closer to your interview where things that are said that might move the market. But anyway, like if I was long gold, I mean you got this 4-hour chart. You're pointing it out. It's, oh, well, we got, divergence. You can see this divergence right here as prices have been moving higher. But at the same time, the one thing that you also have to pay attention to is now that RSI is moderated, what could easily happen is gold could surge to new highs like that, and RSI could break higher. So, once RSI has diverged and gotten to a point where it's back to a median level, that's how you get divergent RSIs, but a continued rally. I mean, you see it in a lot of asset classes that just go straight up or straight down. Just because you have divergence doesn't mean that's not an indicator that things are going to stop. What I look for is, initial divergence, but once RSI is moderated, like this is moderated to me, the RSI is almost reset in this case. Meaning that,
and it's almost at new highs, so it marked off time by going sideways.
Exactly.
Time correction.
Time correction. It worked off these overbought signals, and now, it has the potential to continue higher. I'm not saying that it's going to. I'm just saying that it does have the potential. I hope the euro goes down today. I'm short the euro pound, so it doesn't. And I know you talked about maybe there's a little correction in the euro pound. Look, I'm short the euro pound, but my outlook is a lot longer term. I'm looking for a move, below 90 pence over the course of the next, few weeks. So it's not, but I hope the euro goes down today because it's only going to help my positions, if you will. Now let's talk a little bit about the euro dollar. So, the euro, we spiked past the NFP just briefly. This is the 618 retracement here. This is really key support. I mean, any which way you slice it, this trend line that comes in here is really critical, and it comes in around 118.50. Now that's really far away from where we're at. That means it would take a lot of downside in the euro dollar or a lot of recovery in the dollar index to really change the outlook of what we're seeing in the euro in general. And I don't know if we're going to correct all the way down to 118.50, but I tell you what, if we get to 118.50 today, which is 120 pips from where we're at, I would be interested in buying the euro dollar for a long. So in other words, I would be interested, like tomorrow, if we did this today and tomorrow morning, I would be interested in this trade. I don't think we're going to get down there. Well, I don't know if we're going to get down there, but this is what I would be looking for on any type of pullback. So if you are short the euro, you have to think about how aggressive you're going to be, and do you really think that the uptrend is going to, this uptrend that you see here, do you really think it's going to be disrupted? I personally, I don't think so. And even if we broke through 1850, you got 118 just below that, which is a really critical support, which is right here. But like I said, I mean, it's for me right now, it's the key is, do we get a foothold above 120, or do we head back down to 118.50? 118.50, and I hope we get down to 118.50, because this is where I'd like to be long ultimately. I should talk a little bit about what happened to me yesterday. I was having a great quarter yesterday, and then this happened. I was long the dollar Canadian, and I have to admit, JP Morgan, who I use for execution, and because we have an institutional account, you can't, if you're a retail trader, you're not going to be able to get a JP Morgan account. People always ask me, hey, who do you use? And I use JP Morgan, but when you're trading, I trade big positions, so it's not, the positions I trade are not a retail size. I don't, I'm not trading 100K worth of stuff. I'm trading usually millions of dollars worth of currency at once. So typically my fills are going to be worse than yours. the reason why my fills are worse than yours is because because in order for the broker to take the other side of a trade, they're committing to taking millions of dollars on the other side of whatever trade that I've got going on. So the reason why I mention this is because I was long the US dollar Canadian. I had my stop at 120, 122.80. I got stopped out at 122.60, which that means there's 20 pips of slippage, but man, could it have been worse? I could have got out at 121, 121.60 or somewhere down 30 or somewhere. I really look back on my fill yesterday, and I'm very thankful I got what I got. And what I did is I turned around and I shorted the New Zealand Canadian. As I told you guys I was going to yesterday, I told you, hey, if the US dollar Canadian breaks down, I'm going to turn around and short the New Zealand Canadian, and I did, and I shorted a lot of it, which thank God, because it really really helped me out yesterday from having a very, very bad day. I didn't have a bad day at all, actually. It was not bad at all, but I did get stopped out of the US dollar Canadian. But the thing about the US dollar Canadian is it does change my outlook on the Canadian pairs completely, because this is a multi-year, this is you could see it's a multi-year trend line. And so now that the Canadian is broken lower, this Canadian is really at this point in time an extremely bearish, or the Canadian currency is a bullish currency, but the dollar Canadian is extremely bearish, and especially if we close the week. I mean, we still have today and tomorrow. Let's say, and I'm speaking, obviously ahead of schedule here. Let's say we have a strong dollar response today. So let's say the euro, I'm just thinking out loud here. Let's say the euro drops to, let's say the euro drops to 119, okay? And let's say the US dollar Canadian responds by recovering a little bit, let's say to 122 and change. And let's say tomorrow for the Canadian employment report, and I'm just giving you guys possibilities. Let's say for the Canadian employment report, which I don't think is going to be the case, but let's say it's an extremely weak number. Let's say, Canada ends up losing 30,000 jobs instead of making, 17,000 jobs or whatever they're looking to make. Well, if that's the case, the dollar Canadian could actually get back above 123 by tomorrow. Now, again, I think that's a very low possibility of happening, but unless that happens tomorrow, I'm bearish the dollar Canadian. If for some reason, and I'm just giving you guys some ideas here. If for some reason tomorrow the dollar Canadian closes above here and it closes above 123, that is going to be a massive, massive, massive reversal. And that means it's a false breakdown, and I will go long the dollar Canadian again. But until that happens, or unless that happens, which I think is, if I had to throw a percentage possibility on it, if it's probably a less than 15% chance. But hey, yeah, there still is a chance, but unless it does that, I think the dollar Canadian is bearish. So, and I'm not trading it. I'll kind of reconvene tomorrow and see where we're at, and from there, we'll continue on. Hey, I thought I would do this since you'd mentioned, and we got a few minutes, Dale, before the ECB press conference. You'd mentioned that we do have a we're going to be offering the chat room to traders, and this chat room, I've been chatting with a lot of these people, for some of them for 10 years, and there's only 21 people in this chat room, but you guys are in Jumbotron for those of you that are listening in right now. But you can see this is what the chat room looks like, and if you are in the next couple of weeks or the next week or so, if you get there's Steve is talking right there. If you guys are, and there's Jethro, Ziggy, Nidish, yeah, I got Amanda, Takis, and everybody's from all over the place. But if you are a semi-annual or an annual subscriber of ForexAnalytix, or you've been using ForexAnalytix month to month for more than 6 months, you'll get into this this chat room that I've been chatting with these people for a long time. So just want to let you know that. And there's Captain 2/10 or Captain Ron, and then there's Jack, and there's Chi, and there's Nidish. Chi, how did you do that? That was pretty cool. All right, anyway, and everybody knows they're on Jumbotron, so they say silly things like Nidish in Singapore says buying Bitcoins all in. Great, Nidish. Thank you for giving all those people those great ideas. But anyway, just a great group of people. I've been trading, like I said, I've been trading and chatting with those guys and gals for years, for most of them. And so you guys are going to be able to, you know, jump in there too. And we talk trades, and when things are boring, we like to joke around a little bit. We don't talk about politics. We don't talk about religion, and we don't swear a lot. So I say a lot because some people, you know, are a little offensive, but not in this room. But I said people can get. Anyway, it's a really nice place to be. It's a safe place for our traders. So. So I'm hoping you guys all enjoy that. All right. Again, the press conference is happening in a few minutes. Steve, do you have anything you want to say before the press conference about the ECB or anything? Anything else?
Yeah, good luck. Okay. To be honest, I think that we're going to see some kind of an attempt to push down the currency, but I'm really not at all sure that it's going to be something, you know, that's resonate strongly enough with the market to actually produce that. As I had said in the previous time, you know, we were expecting Draghi to speak. That time it was at Jackson's Hole. I think that unless he explicitly does something, you know, to strongly push down the currency, not doing much or simply just, you know, trying to talk it down without any real, you know, news or pushing the expectations of tapering quite a lot in the future, or reducing the expectations about how fast tapering should be. I think that the Euro USD once again looks like it wants to pop. So I think even after the first couple of minutes that he should start talking, we should already know by you know, the way he's approaching the issue of what's going to be the case. I don't think that we will actually need to wait for the question so much, but just, you know, read between the lines and the sentences of what he initially opens his press conference with. So it's going to be, I think the first 5 minutes are going to be very important.
All right. Well, we'll see if they are here in a few minutes. You know, I'm gonna point out that I'm gonna take you over to the dollar index really quick for those of you that are that are looking at, you know, kind of the overall picture view of the dollar. Now, what's really interesting about the dollar is where we're at. I mean, this is, you know, this is really that kind of like channel low, if you will, in the dollar index at 92, and the dollar looks extremely vulnerable. You know, it looked like we were going to make a recovery last week, and even on Friday, we closed on Friday. If you look at what the candle looked like on Friday, we had this nice little hammer on Friday of last week, and since the market's open, the dollar has just been, you know, just getting, just railroaded again. And I guess one of the grumblings that you got to think about from the ECB's perspective, especially, you know, probably some of the pressure that they're receiving from, you know, Germany is the high euro. I mean, the euro has really rallied quite significantly over the course of this year. And you look at 2017, and we're up, you know what, 19 or maybe about 17%, 16% rally.
Yeah, I paid 10% more for my BMW convertible last week.
There you go. I mean, well, the fact of the matter is you know, with the rise in the euro, you know, German exports are going to be less moving forward. German imports here in the U.S., but you know, from everywhere. Really, as the price of European goods go up, it's more expensive for, you know, people to travel to Europe. I look at the exchange rate and I'm like, well, maybe it's not so favorable for me to go to Europe now, where it was when it was trading down at 105. You know, maybe I don't want to go visit Greece again and see Steve and Stelios. Too expensive to see those guys anymore.
I'm not going to comment.
So you know, the fact of the matter is that no matter if you're Germany or you're Greece or Spain or whoever else, or France, you're going to really start to feel the pinch of a stronger euro. And what if it starts to run away? I think that's the risk that all central bankers feel, especially the ECB, that you have the euro that trades up towards 130 in the next year. And then you've got some serious issues, you know, when you have a 30% you know, rise or a 25% rise in your currency over the course of 12 or 18 months, then you're going to have a serious problem.
It would just unravel all the good it did from 140 to 103.
Yeah, I mean, so you know, I think the ECB and Mario Draghi are going to be very careful about how they handle, you know, any type of exiting of monetary policy.
Blake, I have to reiterate though here that first of all, when we were back at 140, we were just writing that in the chat room as well, you know, because we had this discussion. When we were back in 140, the ECB, the Eurozone was at a serious disinflationary spiral. Growth was extremely low. Political risk was up there. I mean, it was huge. I mean, I was reading constantly articles about possible breakup of the Eurozone, etc., etc., etc. So, you know, the climate was completely different. And there was a huge gap between how the US performed and the EU performed. And that's not the case. First of all, we are a lot lower having to do with the exchange rate, but even if we were there, which we're not, we were a lot lower, the situation is differently. I mean, yeah, the inflation, you know, is obviously, you know, not strong or anything, but it's a lot better than it was. Political risk has almost completely receded, at least according to the standards of political risk we had back then. And the Eurozone economy is doing better and better, actually. So the vast majority of evidence, with the only exception of inflation, which could be better, point to a totally different situation. So I'm pretty sure that you know, Draghi is going to have to be innovative, because he doesn't have any, you know, real tangible things to throw at the market as he had back then. Because back then, when he said, you know, we're going to do everything that's needed, etc., 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 the market knew that he had any reason to mean it, because he had the backing of every Eurozone country, because the situation was real and it was serious.
Your volume has dropped, Steve.
Sorry, mate. So yeah, back then the situation was serious and everybody knew it. So when Draghi committed to the markets that, you know, they're willing to throw the kitchen sink as well if needed, you know, to save the day, the market was inclined to believe them. I don't know if that's the case now.
Yeah, well, you know, we are probably going to find out here very shortly. Sorry, I'm putting out an order or something really quick. Excuse me.
To buy Bitcoins.
Yes, exactly what I'm going to do. I'm all about buying Bitcoins. You know me. Actually, you know, it's funny you mentioned that. I mean, whether you like it or not, the cryptocurrency, you know, mania is here and it's here to stay. So You know, I actually will probably end up looking to buy Bitcoins after some sort of meaningful correction in the market, because really it seems that it's being more and more widely adopted. So not saying that that's something I'm going to do today. I'm talking, you know, probably the next, you know, 12 to 18 months.
And
so,
I think at some point we're going to have panic selling in the sense that from what you've seen from the support staff of ForexAnalytix, what kind of questions we get about Bitcoin, it's more than obvious that, you know, a big part of the crowd that's involved with that is completely immature, having to do with how investing works, how investments work. You know, it's the whole mentality that it's a one-way train, and you know, these things don't end well.
Yeah, we got Draghi will be starting here in just 1 second. Jobless claims
298
are up.
Yeah, versus 241.
Yeah, and they say it's due to Harvey, so it's not really affecting the dollar all that much. I mean, you take a look at the dollar.
We also had Canadian permits, which are down minus 3.5% versus minus 1.5% expected.
And you know, and the Canadian is really going to probably be on hold, waiting for tomorrow's jobs report out of Canada. So it's all about the euro right now. And Draghi, I'm not even listening to the press conference, obviously, because I'm here with you guys. So actually, I should flip it over to the. I'll just pay attention to my wire. It's okay. Anyway, so the euro is bid up a little bit here. Yeah, just a few. I mean, just here we go. Spikes up towards one. We're almost at 120. Okay, I sold some at 89 just now.
Nice, Blake.
Wait a second.
Well, I don't know.
I know. It could fail.
Don't jinx me, you know. Just.
Oh, okay. All right. Okay. I didn't know you believed in.
It's not nice until I get out. You know.
All right, Jinx, you owe me a Coke.
Yeah, I don't congratulate myself on anything after I get out. So, yeah, I just sold that spike up at 80. Actually, I sold it at 88. I thought I got 89.
Most probably that was.
You would have been a great pit trader, man.
I used to have to scream out my orders for like when I wanted to buy Microsoft and Earthlink and MindSpring. Yeah.
Oh my God, those are blasts from the past.
Yeah.
Earthlink.
Yeah.
How old are you again, buddy?
I'm in my mid 40s, but the latter part of my mid 40s.
Okay.
Yeah. I don't need to give you guys specifics. But I've been you know, I've been trading since my mid 20s, so you can do the math. All right, so here's the euro.
He's about to start.
Come on back down.
He's about to start just now, actually.
I'm kind of surprised they didn't. Oh, they did take out that high with that spike. So the stop's above the high several candles ago.
Yeah.
The NFT high.
Oh yeah.
Yeah.
I
just closed it out for 8. You know, I just
remain at the current level for an extended period of time.
I just took mine off at 78, and I'm going to sell it again. See, there's gold. I mean, gold spiked up and spiked down. By the way, if you didn't see gold just took out all the stops above the highs. I'll come back to the euro really quick. Whoops, that's silver. Here's gold. Yeah. So,
QE beyond the end of the year, if necessary. Current comment.
Oh, that's. I'm surprised the euro's not being more aggressively sold on that. Here it is. It's coming down now, a little bit. Now right back up again. I don't know what to do here. I'm not doing anything actually. So. Oh wow, we just popped 120 stops.
Unchanged medium-term outlook for economic growth and inflation. I think that's actually bullish.
Nice cover, Blake.
Yeah, went above one. Oh, right back down, 65, 63.
Oh my goodness.
What'd you say, Steve? What'd you say there? Oh my God, it's completely crapping the bed right now.
Source of uncertainty, volatility in the euro. And it puts in question the medium-term stability of the expansion.
Oh God, these days I haven't touched the euro yet. Thinking about shorting some up here.
So he's talking directly about the euro exchange rate. Personally, I said it before, I think that's not going to be enough if he just leaves it there. So if
I sold it at 64. Damn it! I thought I'd get 74. Damn. Now I might be stuck in this trade for a bit.
He's mentioning inflation once again.
You know that you have ice water running through your veins. I had to chew a couple Tums already, like in trading places. You know, they're in the bathroom drinking.
He's mentioning that needed, they are willing to increase asset purchases. I think it's a completely hollow threat. Or postpone it beyond the end of the year, as he initially mentioned. Mentioning inflation for the 5th time already.
Well, the only stops they haven't taken out are under 119.10. That's the only liquidity left. That's the only liquidity. Oh yeah, there. And then 1870. So they have all the stops above the market now.
Yeah, they took all those out.
Yeah, anyone that was short is no longer short.
Right.
So see if they could complete the marathon and clean out all the longs.
Yeah, if they clean out all the longs below 119.10 or so, I don't know if it's going to get down there.
I doubt for what he said. I think the important part of the interview is already over because they showed their intentions. I doubt this is going to be enough to push euro down. I don't know if he's going to answer to some kind of a question, you know, in a way that's going to sound a lot more dovish than expected initially. But the fact that he started by mentioning that the recovery is ongoing and it's it's stable and quite strong, and despite the mentions afterwards in FX, the mentions were very vague still. I mean, they just talked about the euro volatility might be a factor.
You're spiking right back up again.
Yeah. Global recovery supports exports. That's a very, very bullish statement because in a sense, it contradicts part of the point that the FX rate is something to be monitored. Because one of the main aspects that the FX rate affects theoretically is exports. So by saying that the global environment, is positive for exports, is like saying that, okay, the FX rate at least, is not harming that. I really think that he hasn't done enough to push euro down. If he doesn't give us something new, the market is going to realize that, it doesn't have enough reason to sell euros on this.
Well, remember, this is right now, all he's doing is he's just talking. He's talking, but this is all of his canned speech too. He hasn't started answering questions yet.
Also upgraded the economic growth of this year from 1.9% to 2.2%. That's quite a substantial difference. That's more than a 10% of a hike in expectations.
All right. I'm gonna have to get ready for the trading day. I'm gonna probably cover up my euro here and just take a little bit of a loss and stand aside. So, who do you have visiting today, Dale?
Lydia Adam Finkley, the cable queen.
Oh, good. Okay, that'll be a great interview. Steve, I'm going to pass it over to you for right now, and let you run with it. I think you got to wait for this for the Q&A coming up.
Okay. I'm not going to give the number, Blake, but we set a new record for attendance today.
Oh, great. Oh, that's good. You know, it's the free webinars are great. Yeah, it's awesome. Yeah. All right, guys. Have a great trading session, and good luck,
Blake.
with this.
Good luck out there.
Yeah, good luck, buddy. Ice cold water running through his veins. That's Blake. Hello, Nostra Volgi. What do you think, bro? And a very good commentary on while he was giving his speech to pick out all the bullet points.
I'm really taking the risk once again of saying that he hasn't delivered enough to actually push the Euro USD down. I mean, if I was an institution already invested in being long Euro, I would not get worried at all.
Yeah, you should be in an institution.
Yeah, true, but not that kind of an institution. So what to worry about? Hollow threats that if needed we're going to prolong QE, and we are always willing to do more if the situation requires us to do so. But on the other hand, upgrading the growth outlook, saying that the recovery is showing to be stabilizing, saying things like that contradict the comments about the FX rate, like what I mentioned. He said that the global environment is positive for exports. So in essence, they just threw a few lines there, trying to tame a little bit the euro strength by saying we're monitoring and general commentary like that, which is far from being enough. So
you know what? The one market that really believes there still is a taper or something is the Bund. Look at that candle.
No. This is rollover.
Oh, okay.
This is rollover.
Because I'd say
yeah. So ignore the Bund. This is a rollover. Yes.
Okay. Because I would say wow.
Yeah. Otherwise, it would have been whoa. Yeah. So the situation is what it is. I mean, as you see, the euro remains near the highs. It's actually above the highest close it has done, and it's quite likely that we're going to have a record close. I mean, a multi. Let's see. Last time we closed up here we have to go back to 2015, the very beginning of it. Okay.
Wow.
Yeah. So we are easily headed for a 2.5+ years, record close today. So unless he throws in he pulls some kind of a rabbit out of a hat during the Q&A, which I doubt it. I mean, if he had something strong to say, he would have put it in the initial commentary. But okay, you never know. But unless something very strong comes out of the Q&A, I don't see these euro flows reversing anytime soon. And I really think that the euro remains buy on dips from what we see here. I really believe that this time there was a chance that he would actually go a little bit further and put something there, although I couldn't figure what that would be, as I said before. But as it seems, no, this disappoints once again, the dovish expectations. That's what I think. So, we can have a look at the euro pairs, but they seem to be, let's have a look at them. So Euro Aussie, for example, Euro Aussie now, has stalled a little bit here, as we said the other day. As long as we remain above 144.30 here, since the previous leg higher was like impulsive, we still favor like a break higher, but it's like more or less okay. Euro Kiwi is hitting the highs once again after holding the channel support. Obviously, this time I'm going to get stopped out of this. Euro NOK, is more or less standing still because we also have seen some, very strong moves from the NOK lately. EuroCAD, I know that a lot of people are looking at it. Obviously, yesterday it tested the lows once again, and it actually tested to the PIP, the 200 EMA. I don't think that the EuroCAD produces so much of a good opportunity nowadays. Lately, simply because both the euro and the CAD have been extremely resilient. So in essence, now this is like the fight between two strong currencies. So although I still expect that a move to 143.50 is likely to actually test this zone, I would refrain from taking a trade again in it because I'd rather be long the CAD or the euro against weaker currencies, simply because it's obviously going to work out better. Euro yen. Let's have a look at the euro yen. Oh, the euro pound, by the way, since you mentioned it, the euro pound is seeing a nice bounce here, and it's actually now at the highs. So there is the chance that this was it. We need to monitor, but today's candle in combination with the previous two, this can very likely end up being a morning star formation, which will mean that that's going to be the end of this little correction and the move higher. So I'm going to be monitoring today's close because I might book the profits I have here and call it a decent trade, because I don't want to lose my profits here. There's no point. It was nice remaining short because you never know. Draghi might have dropped a bomb, but that doesn't seem to be the case. Same with the euro yen. It briefly broke to new highs intraday. It dipped lower, but I have no reason to believe that this was not like just a wave one of a new move higher, because this was clearly an ABC. Okay, so this recovery from the ascending wedge that we had in correction from the ascending wedge was clearly, for the time being, three waves. And if you see, roughly, at this general area is where the euro yen found support once again, and it's pushing higher. So to be honest, I wouldn't be short euro yen here. No chance. I think the chances of pushing to new highs are extremely high. Extremely high. Yeah, I think euro pairs look good. Okay, let's start checking out questions that we have from friends. Let me pull the questions. There we go. USD CAD on lows. Oh yeah, let's speak about the USD CAD. Thank you. Okay, if you remember, Dale, I was very uncertain that we had seen the end of the move in USD CAD. Obviously, the GDP, the huge GDP print we had, and the hike that was delivered yesterday, resume this monster move. From a weekly chart perspective, it's undoubted that we're pushing to new lows. If you remember, we had a lot of discussions about the impulsive nature of this move and the overlapping nature of this move, and that we should have at least one move lower. The target actually, since I said back then, is 115.64, simply because this is the equality target of this move lower to this move lower. So I'm still inclined to be, will it move in, in a straight line? No, it won't. But I really believe that we're headed there. The next target is the 50% of this rally, which is at 120.38. I think we're going to go there. No questions asked. And then it's the 61.8 at 114.14 and the equality target, as I said, at 115.65. So for me, this area here, this general area, is an area that we're most probably going to visit. We also broke below the 200 simple moving average on the weekly chart, which we hadn't done so since 2013. Okay, so I really think that any way you look at this chart, you cannot be bullish, especially after yesterday's move. Okay, so any recovery towards 124.30, because now we have a new zone. We had indicated the 128 zone, which held very nice at the first bounce, but now we have this zone. Okay, so for me, any recovery to this zone is, unless something spectacular has happened in a macro level, is should be sold. As simple as that. Okay. So any move towards here will find a lot of sellers. I have no doubt about that. Only a break above there opens again the possibility of a test of 128. But I'm seriously very skeptical about that. Very skeptical about that. Obviously, USD NOK has not been following, that strongly. It has been breaking, though, the pennant. This is also based on the fact that oil has been very strong. So USD NOK looks good. I remind you here that on a weekly basis, USD NOK also had provided more than we could ask for. It was the break of the 8 level which held this market up since exactly 2 years ago. So, we even wrote it in ForexAnalytix, like in the takeaways. The takeaways, it's like the summation of if each tab for a pair that the fact that we broke below the 8 zone tells you everything you need to know about how you should treat the pair from this point on. So I think the USD NOK has more to move as well, and especially seeing this kind of dollar weakness, and seeing crude move higher, obviously, a move up there is going to be extremely supportive. I think that crude after 5 consecutive days higher is now consolidating here. But, if we don't break below this zone once again, like very, very soon, I think this is just going to be like a simple short-term consolidation before getting another move higher towards, okay, we can now delete all that. We got that move. We had gotten that move. So I think that any move towards 52 might give an opportunity to bite for another move higher. So I think that 52 is the next serious resistance, as long as we end up holding this level. So as long as we see that this is just a short-term consolidation in time, I'm looking higher towards 52, perhaps a little pullback from there, and perhaps a continuation higher from that point. So
I made a good guess, Steve, thinking that euro pound would pop, and
yeah.
Because of that, the pound would be the preferred short. So, again, it gets back down to trade selection, like my American Idol analogy, song choice. So, I really believe that even if you don't trade euro pound, you have to use it to decide your preferred longs and shorts between euro and cable.
Correct.
So,
and by the way, we mentioned it yesterday. As it seems today, the Aussie is on its way for a new closing high. It's going to be the highest close since, again, 2015, May 2015. So as long as it remains strong today. And let's have a look at the Kiwi as well. The Kiwi is still lagging. Yesterday we had like a big lower candle. Today we are trying to move higher. It's more than obvious that between the two of them, the Aussie remains preferred, and you can even see that we just had 2 days of weakness in the Aussie Kiwi, and we're up at the highs once again. So this market remains.
But you know what? Even that Aussie Kiwi there, Steve. For people that were playing the head and shoulders breakout, I think the market's giving you a little bit too much, too many opportunities to sell it above the breakdown.
Mm-hmm.
What do you think, buddy?
And
You know what? I'm going to get short above the breakdown. Doesn't make sense to me.
yeah, and keep in mind that this is a market that actually since the end of July has produced almost no pullbacks. So we've been going on at it for almost 1.5 months without any serious pullback. I mean, this is the best we've managed to get these 2 days. Actually, when we got that inside day, we wrote that, you know, as long as the breakout level at 110.18 is holding, you know, obviously there is nothing changed to the fact that it remains very bullish. It didn't even test that. I mean, this shows that the appetite for the specific cross is like extremely strong, which shows that the market is actually trusting this breakout. We had already said since the breakout of this triangle that the next move is going to be, Blake said 114, and 114 is indeed also the 161.8. So yes, this might easily be the case. For me, you know, I have a lower target for now. It's 113, it's the 113 zone. But yeah, of course, 114 is doable as well. But I really think we're going there. I mean, look at this strength. It's like relentless, especially for a boring, the vast majority of the times, you know, this cross rate like spends its time being extremely slow and dull and boring. But you know, it's been showing like, you know, some moves like you would expect from cross rates like, I don't know, the Euro Kiwi or whatever else.
The pound Kiwi followed through on that breakout too that we talked about and Luca brought up last week, I think.
Let's have a look at both the pound Aussie and the pound Kiwi. Okay, the pound Aussie is like Aussie Kiwi. It has completely fallen asleep. Just look how many days it has spent chopping around. This kind of a price action personally doesn't inspire.
Not that bullish.
Yeah, exactly. Doesn't inspire me. So we remain within this descending channel, and as long as this price action is so boring and unsurprising and unable to actually, you know, move higher, I have no reason to change my opinion that it looks that it remains bearish. And especially, you know, unless we break this descending channel resistance, you know, why would you want to be bullish anyhow? I mean, from a technical perspective, why would you want to be? If you want to be, you know, from but on the other hand, this is a totally different story. You know, if you remember, we had mentioned for a big period of time this, you know, this like huge range. It's a 500 pip range that it was holding.
Yeah,
like
a rectangle.
Yeah, and you know, it behaved very, very well. I mean, this shows why you need to be patient. Why? Because we get a breakout, we almost get a retest of it, and we're pushing higher once again. So, you know, obviously, being bearish this pair, as long as we remain above this general zone. So, I would say my line in the sand is at around 178.40, I would call it. So, as long as we remain above 178.40, really, I consider it nuts wanting to be short. I'm not talking about scalping, of course. You know, if you're a scalper, you're looking at 1 hour charts, 15-minute charts. You know, you might get like a billion opportunities to be short there. But I'm talking, you know, about trading on a daily chart. Okay. Okay, let's go through some questions and see what we didn't cover already. What about great Steve? It's the big Draghi. Yep, Zach, I totally agree with that. Bloomberg are periscoping Draghi. The games begin. Bund, yeah, I explained that the Bund is had a rollover. So the candle you see there is like you know, it's just a rollover. So it's not like a huge plunge. What's your opinion on crude oil regarding Hurricane Irma? Do you think that oil will rally because of the hurricane? I'm not sure about it, mate. I'm looking at it from a technical perspective because let me be very honest. If you want to trade oil having to do with fundamentals, that's all you need to do in your life. I mean, there are people that trade like a single market, like oil or wheat or corn. So there are commodity traders especially that are very, very focused in a specific commodity. And, you know, they're monitoring even like minor fundamentals that you and I don't even have access to. I think that Irma is already priced in one way or another, you know, at an extent. So I don't think we should be taking it so much into account. I'm just trading the technicals here, and they show me that it's currently that the currency is currently that the oil market is currently very well bid, and as long as we hold the level I showed, I think that it's going to remain to do so. Swiss pairs, yeah, Swiss pairs. Let's have a look at the Swiss pairs. And thank you for reminding me, simply because this was the catalyst for a bullish breakout. So more likely than not, we are about to register a higher high once again in the Euro Swiss after today, which will probably point to this corrective move lower being done with, and to the next leg higher. So I'm monitoring this trend line. A close above it today, I think, is going to, this is the Euro Swiss, by the way, if I didn't say so.
Right.
So I think that a close above this trend line today is going to initiate the next leg higher for the pair. Okay. Also, if you see here from the RSI was ridiculously overbought, especially for this kind of a currency pair. It was like above 84, and it actually worked out the extreme overbought conditions. It fell down to 52, which is a very healthy, between 40 and 60 is a very healthy level to be looking for support in the RSI at a bullish market. And this is clearly a bullish market because the previous move was undeniably impulsive. Okay. I think this produces another opportunity for people to join this rally. Let's see how we close today, though. Okay, I never like to jump the gun on a daily chart, but it looks like it.
Okay, buddy. Do you have more to cover?
No. Right. Okay, yeah, it's an interview. Okay, who do we have today? We said Dale?
At Faith Might.
Okay, perfect.
Lydia.
Oh, it's Lydia. Okay, yeah. Enjoy the interview. I'm going to be listening.
Oh, I can tell by your voice it went up that you're a fan.
Yeah, but
Okay.
initially, I didn't realize but
all right.
Yeah, okay, nice.
All right. Thank you, Steve. Thanks for going through.
We've had Lydia before, once or twice.
This, I think, is her third time here.
Yeah, okay, twice. So I remember well. Okay, perfect.
Yeah,
enjoy.
and great job interpreting the ECB today for our community. Nice job.
Thank you. My pleasure.
Hi, Lydia. I'm making you the presenter now. We need you to tell us one of the best on the street, Lydia Pinkley at Faith Might. Everyone, welcome, Lydia. How are you, Lyd?
I'm good, Dale. How are you? Good morning, everyone.
Good.
Thanks for having me back.
Yeah, great to have you back. So you want to start here against the commodity currencies? Or do you want to start with the fulcrum, the pound itself against the dollar?
No,
wherever you want to go.
Out here because
okay.
Bank of England shocked us all yesterday.
Yeah. Yeah. Wow.
So this one, I'm just starting here too on a 4-hour chart, just because I think the move was very well, actually well telegraphed, and it was a move we've been looking at for my students and I for 2 weeks. So we had this breakdown, and I guess I thought I would start on this.
Okay. Yeah, true. Yeah, I mean, Canada, and it was a surprise, and the pound is acting pretty good against commodity currencies.
Yeah, it's been, yeah, you guys were talking about the Kiwi too, and and the Aussie. I'm going to talk about that too. But with the CAD, we have this breakdown, and we have this this trend line that's been developing for a couple months. So just been keeping an eye on it. Not that it's a pure trend line, but it was just something to keep an eye on while we were kind of meandering at this 160 level.
What do they call those trend lines, Lydia, where they go through the internals of the trend and not just points of highs or lows on tails? Do you call them speed lines, or I know Grega calls it some type of Elliott channel or something, but what do you call it?
No, for me, it's a trend line. For me, I use trend lines to see if they're if they can be pure, like you're suggesting. Otherwise, yeah, I mean, I don't really use trend lines as decision making. It's more to kind of see how the moves are behaving, if it's an area that the market is paying attention to, because so many traders use trend lines. But you know, it's not a decision making thing in my chart. It's just like interesting price action. So you know, so when we're chopping around, so I'll draw it to see if it's something that the trend is respecting or not. This one has been kind of pure, not really. So it's been 160 has been kind of a weird level until yesterday. And then what I thought was really interesting, like this spike, and I think we'll see it better on the 60-minute, that we got this bounce right into this extension. So this is the move. Like we came down here and we had this rally up to 63.50, which is right into a 61.8 Fibonacci level. And I draw extensions to see the target, potential target. And I just like the 123. It's quick. It's relatively quick after we come out of a correction. But last week we stalled again at these lows at 160, and I took the profit. So I mean, I came up here at 163, and we were able to ride this wave down and take profits at 160.50. Nice. But we were waiting for 158.75. So it felt, you know, it's one of those things where you're like, okay, I'm gonna take the profits because I see price action is waning, and you see the momentum down, you know, momentum is kind of letting up, and it's Friday. Yes. You're going into a long weekend, so let me not be greedy, even though I have my target at 158. So this was it was a good lesson. 160 is a support level. It's Friday. We have waning momentum. We took profits. We saw a bounce right beginning of this week, and we draw another fib, and it was just another pure move. It came right into 62 yesterday and then just dropped. I mean, it was literally 10 minutes before the announcement. And I DM'd my students saying, you know, we were set up at 62. I was watching it at the 50% line, which was 61.80, and we took it early. And so I don't know, a lot of people saw the tweet. I took it. I went for a run and I put a stop above it before the Bank of Canada came out because I couldn't stand it. But I was mad about taking it early because I saw it hit 62.20, and that's just what, 20 pips. And then came back, and my students had their stops. I didn't have my target in, so I had to come out about 58.30 when I came back from my run. But they got in right, you know, they came out right at the 123. So this was the line. I just put this up to say nothing moves in a straight line. So you want to just keep in mind the bigger overall moves, even when you're coming into a context right here after last week or even yesterday in the context of a smaller move. But we still maintained our target, though we got this kind of, we stopped at support level on Friday, came back and bounced, and then finally hit the target of the overall move. And
so is that normal for you to, you know, it's kind of a binary outcome on any kind of central bank, normal for you to not even care about it and just, you know, throwing your stop, and you know the area is more important than a potential red event?
Yes.
Okay.
Yeah. For me, I don't. It's hard. You can't say you don't trade fundamentals. I mean, like in Forex especially, and I'm sure in future Forex particular though, you have to pay attention to fundamentals, right? But I've gone to a point in my trading where it can't dictate how I trade. The technicals have to do that. I think fundamentals will always dictate our direction, but it will never keep me out of a technical setup. I can't. I've seen it happen too many times. And so if I was scared of the Bank of Canada announcement, I wouldn't have traded this setup. But the setup was perfect. It was pure. It was
congratulations.
So especially to my students.
You're like Blake, and I sang ice cold water running through her veins.
Blake is an old mentor. Like he was one of the first guys when I was first learning Forex. So yeah. So he has some real strict technical rules too that I had followed even back then. But you know, when you're new, it's like how can you not trade that, or how can you take it before an event like that? Yeah, I mean, but my stop was well defined. You know, it was the 61.8 line here at 62.23. So put a stop above that and go for a run.
Yeah, smart to step away too. That's something else. Lydia, I think you'll agree. Staring at the screen does not change your destiny on a trade.
No, it just makes you more anxious.
Yeah,
I mean, trades. It makes you to do things too early. Like I said, I was upset that I took it early. I didn't really take it early though, because I took it at the 50% line, but I had my setup at 62.
Yeah, you perfectionist, you.
Yeah.
So, yeah, I mean, so anyway, staring at the screen, I've taught people to put their cursor on a candle and then drag it in the direction they want the market to go. That doesn't work, or magnets. I mean, I've tried it all. So really smart to walk away from the screen. And how do you feel when you walked in the door and you saw the outcome?
I was like, oh, wow. And I mean, mostly because it was, it's just a 300 pip move in 10 minutes. Yeah. You just don't make that kind of money that fast normally. So that's one thing I have to make sure I tell my students too, like, okay, like this is a great trading week. We don't need to put in a whole bunch of trades anymore until, let the markets kind of figure themselves out, especially after this ECB event, and then we'll not chase. That was the biggest thing, because everyone was saying, can we get back in? I said, no, you just hauled 300 pips. Leave it alone.
Relish it for a little while.
Right. Hold on to it.
Although I did see a great tagline by this guy I'm going to interview. He says, my best trade is my next trade. But there's never anything wrong with, relishing the victory. You ever tell your students to, after windfalls, pull some money out of their account because they're just digits in the account, and when you spend it and it's cash in hand, it becomes more real than it does when it's just in your account. Like, in Vegas, they give you chips, and you're just betting chips. It's not money.
Until it's cash in your hand, and then I did. Yeah, no, I hear you. Yeah.
Okay.
Yeah, absolutely.
So I'm curious where you're at on. Okay, you want to go the pound, because I'm very interested in. Yeah, you knew I wanted to talk about this. I'm just assuming that you viewed what we. This is a guess that this pullback from 93 to the recent lows is just a pullback in an ongoing bull market. Am I correct that that's your thesis?
Yeah, okay. That's my view. So I didn't actually turn. I turned a bit bearish, I guess, for the first half of this week when it broke below Friday's lows. These were Friday's lows, and I was positioned here to go long on Friday. Took like 5 pips and took it off. I did not want to hold the euro pound through the weekend. There's just the geopolitical landscape right now is very volatile over the weekends. Plus Brexit, you don't know what will be said or what's going to be announced over the weekend. So I was very reluctant to hold it. So I saw it rally on Sunday, Monday market open. And that annoyed me because that was my direction, and I was following the fib. So it was annoyed, but I liked it. I like when the setup's going my direction, and then it turned over and broke this Friday's low. To me, I thought that was a signal, especially if I could just zoom a bit. You can see how we retested the former lows. After that break. So to me, I was selling, and then yesterday we got nothing. And the pound, this is when the pound was rallying, right? It was rallying against the yen, the Aussie, the Kiwi, the CAD. This was right before the announcement. I mean, it was rallying, and we weren't seeing the euro pound break lower.
I wanted to ask you about that because you've been doing this a long time, and if you play a breakdown area, which legitimately it was, it looked like a breakdown, but the market makes no progress for more than a candle or two, it might hold. If it starts holding for like a few days, I say to myself, why is the market making it convenient for people who didn't sell the breakdown to do it 2 days later? Or do you get jaded when?
Yeah. I flipped long yesterday because that makes 0 sense. No, that to me is a warning. One, it started to feel like I sold lows, and I hate that. So it started to feel like that. And when one of the crosses. Usually you'll see like the crosses move in the same direction. Not usually. You can tend to see with the pound in particular, the crosses move in the same direction, but the pound dollar, you have cable not joining that same direction or even moving in the opposite direction.
Right.
So when the euro pound was not participating in a pound rally that was happening in every other cross and even in the pound dollar, that's when I took a small loss, like 5 pips, and I flipped long.
Yeah, because the real breakdowns, you know, usually they don't even give you a chance for a retest. You know what I mean? If you don't go with it, you miss it.
Right.
So,
right.
Yeah,
especially after a retest. And with the pound, even with, especially after a retest and with a pound pair, you should get follow through, especially when everything else is moving on these crosses. And again, we trade charts, you know, every chart unto itself. I don't like correlations. I like to look at them, but I don't like to trade off of them. But when I see that we don't have strength in the pound against the euro, when I see strength in the pound against the yen and the dollar, that to me was a signal to for bears to bail, sellers to bail. I bailed. So,
do you have any fibs above 93 if you're looking for new highs as to what the potential upside is? And you know, we don't know for sure yet that we're going to make new highs.
Right.
We could rally back to 92.5 and fail.
Right. And so I think people are looking for to see what's going to be happening to 92.50 and 93. But I mean, for me, I think the potential is into 94 next.
Okay.
If you draw a fib, and I think this would be new. So if I were to draw an extension, I think the next extension that I saw landed at 94. Let's just really quickly. Yeah, 93.75. So you know, that would be
number.
Because this is the new move for me. Okay, so like we have this correction, and so this is going to tell me my pip potential to the upside. And I see that, you know, 62.18 has held after the ECB statement, and now Draghi is now underway in his press conference, and we've now started to rally. But 92 is still, you know, it's hard for me to say, okay, if you didn't position at the lows, get in on this dip below 92. That's difficult to say. One, because I'm not watching the press conference, but two, because 92 is held for the last 3-4 days. Every time we wind up here after a break, since the break below, we haven't been holding this level to the upside. So that will be our line in the sand today after we finish talking. I think there's high potential though that this is a setup. This has been a setup at these lows of the week to see us rally above 93.
Okay.
That's a good setup right now, but it's 92.
It looks that way now.
Yeah, it does, and I'm still very bullish. I mean, this is a tremendously bullish, regardless of what you feel about it. This is very bullish. And when we broke above 88.50, take us to a monthly chart to really see 88.50. Like this is we've had problems up here. So this break is just something to watch in context of these former highs back in 2007, 8, and 9. Just know that, you know, this is right for a false break, but it can take months to develop. So we could be up here for a while, even though it feels lofty.
It almost looks like you could challenge those highs from the end of the financial crisis.
Yeah, I think we're well positioned to, especially if a hard Brexit comes through. I think. I think if those talks don't go smoothly, whatever smooth means in these contexts these days.
Are you leaning that way, that there'll be hiccups?
Yes.
Okay.
I don't think you can divorce a market this big and everything so intertwined without hiccups.
They say that divorce is almost as stressful on people as death. So why wouldn't it be as stressful on a market?
Yeah, they say divorce is a death, right? It's just
okay. Well, I haven't. That's one thing I haven't experienced yet, and I hope not to. But so what about Guppy, Lydia? Because it was a weak sister of the yen crosses. I mean, that was a huge decline. You know, I feel fortunate. I was, you know, kind of a bear there, but now I don't know.
last time we talked back in July, it was, you know, hammering up on this resistance, 148 resistance. And I just felt like, okay, we might get a break because this is the multiple time, you know, multiple times against a level. You tend to get a break of that level. But it held beautifully, really, and broke this trend line. And we have even a retest on this weekly chart. So been expecting a move into this former support, these lows here at 138, 138.50. This low, and I've been expecting this move to come in. And we just haven't been able to get below 140. And I think we can do so. So this is basically the fib that I'm looking at since the break to 140, and then we've had this bounce back to 143. I think this is the overall move. This is the setup. And what we had, because of North Korean news, we had this gap. We had this gap when the market opened, and then we fell lower. Typical risk aversion play. Very expected for me that we see the yen to rally after the headlines from North Korea on Sunday and Monday. But these gaps don't really tend to go unfilled. In Forex, like we can have some breakaway gaps, but it's rare. We have to be in a really
like the Paris election. That was rare. The Paris
exactly. I was thinking the euro too. The euro dollar has a gap in there from a couple years back. But so I was looking at it earlier in the week. I didn't think we were going to come and fill this gap, but I felt like I couldn't short the pound yen until we looked like we were going to attempt to fill the gap, and we did it yesterday. So now I'm waiting for a retest of 143, and only because in this fib setup we have a failed low. So we should see we should see it correct, and we should see it test new lows. We got a stop here. It's at 140, right? 140, right above 142. 142. We have this failed low, and for me, when we see a failed low and a fib move, we're going to see a new high, and it doesn't have to be a new high that breaks the fib because they still stay within the fib setup. But what we're going to see is a higher high than the previous high. So I'm looking to see that we get above 143, and I think we can touch it. So we've had back here, this is late August, we've had 143.30. We've seen 143.30 several times with this breakdown in the pound yen. I think that's what we might be doing again.
Okay. If we get through there, do you think the potential back test of your trend line that we broke down on is
144? Definitely a move into 144.
Yeah. Okay.
145 if you want to test the trend line, but I'm concerned about 144. It's also a fib level. So right there at 61.8, we have some confluence there with that resistance. So I could see a move there. So I haven't stopped. My stop is tight above 143.30. And I mean, really, in a fib move, I should have a stop above the 61.8. But just because I'm playing this resistance line, my stop is tight above because I feel like we could, if we get through this resistance, we could see a challenge of 144, you know, just testing the extreme range of the fibs before we can really get this breakdown. If we see geopolitical news pick up, whether it's the U.S., North Korea, we're going to see the yen strengthen. I think people need to pay attention to the fact that the yen is maintained its safe haven label while the dollar has not. And we can just rotate into the dollar on that.
That's a pearl. That's a pearl.
We have that safe haven label has been waning in this new presidency, and it's basically fallen off. Like I've seen that we've had several news events that we have not seen the dollar strengthen, where people want to see the dollar strengthen. So I know a lot of traders looking at this fib line. This is the Brexit, all this Brexit news since the vote, since the declaration of the hard exit, and that this rally is testing this area. But I contend that the fib levels that one should be looking at is this one. And this is off the rally. When we got that breakdown 2 weeks ago, right into this former support level, which is 127.75. This is really a 38.2 fib. You can see we're targeting 135 off of this bigger move. This is, so to me, this is the big move. This is the highlight. And I've been bearish the dollar for longer than most. I think.
Okay.
And it's been choppy. Like it hasn't been a hard trade. I mean, it hasn't been an easy trade. We had a lot of the summer, well, really even April, May. We had a lot of choppiness. Remember, it was just hard to get through this. It was hard to get to 130, and then it was hard to break 130.
Yeah, so because it was the layoff currency on your Euro Sterling, which is the most liquid pair out there, right?
Yeah. So it really, we didn't see the cable start moving until we saw the euro dollar start to really strengthen too, as well.
So so your target here is, you think we're going to 35 in the pound?
I do think we're going to 35.
Okay.
And
right.
So if you missed it, like if you missed it, you're looking at the 4-hour chart just to find an entry. And we've had several entries on these pullbacks. This one was the best, was last week into 129.20. That was a fib off this move. This was a perfect fib move here. We've had you'd
buy any pullback towards 130 if offered, if it happened.
Oh yeah.
Okay.
I've been missing them. I've been in other pairs, so I have not been able to catch this this dollar train. But I think that it is going to at least it's going to 132.50. So everyone's highs are big for 135. It's 500 pips out. It's now 400 pips out. Just do take care to watch 32.50. Don't not respect that this level was hard to break. And I think it would be prudent when we reach up here that you would take some profits, especially if you're positioned down here at these lows. If you're positioned below 130, kudos. I think you can hold it to this resistance level. Take some off. We might get a pullback there. Add back in and wait and ride it to 135. I also have 133.50 or 133.50 somewhere you want to pay attention to too. That where these kind of high, this zone between 133.50 and 135. Back on this time last year, exactly a year ago, we were struggling with whether after we broke 135 for the first time in almost 10 years, we were struggling with moving low with follow through. But we kept coming into 133, 133.50, and then we finally got the breakdown. So I would just say for cable bulls, pay attention to that former high at 32.50. We could find resistance there again and fall back to 130 again. I think the top side here is difficult. It's been difficult, and the difficulty is because the euro pound is going to follow the euro dollar higher, and so this puts a drag on cable.
Yeah, so you're buying the weakness instead of the lead.
Exactly. So you just have to respect the fact that this is going to be just we're going to fight through a lot of resistance. We're going to fight against weakness. We're going to have this drag from the euro pound.
Lower beta, everything. Yeah. So, I'm getting a question from the community. I don't know if you follow it, but they're asking about pound NOK on the weekly. If you even pay, and if you don't pay attention to that, I'd like to know if you think the pound Kiwi recent strength is long lasting and real. So
that was the pound NOK?
Yeah.
Yes, I don't pay attention to the krona or the
so then how about pound Kiwi, Lydia? Recently we've broken out of
So and I know you guys were discussing it earlier. We have been in this trading range until last week. We've been in this trading range, and I define the range between 179 and 176.65-ish, 64. You can do 76.50, and that anything below that we've seen have been false breaks, and they've been beautiful false breaks. We've gotten like 100, 200 pip moves out of these false breaks. But that a break to the upside, so a break to the downside on Kiwi strength had to be proven. We had to get below 174 for that to be real. But a break to the upside, which is what I was talking to students about actually last week. If we get a break to the upside, we want to wait for it to test, and it did. We want to test these tops again, but this is going to be our sure breakout. And that is what we've seen. We've gotten the break above 179. I think this was last week, two weeks back. I think last week.
So that would measure about 83 or so, just on the width of the rectangle. So you probably have some fibs up there.
Yeah, I do have some fibs, and my fibs come in about 182, and then we have one at 183. So 182 is like our first line of resistance. You see, we got close. We're kind of pulling back, but yeah, I like 183. I think that this can definitely, whoa, okay, there. I think this is one that can definitely start to test these highs. So I'm not on the daily chart. Okay. So I think, yeah, 182 is like former lows and former highs. So just watch that area on the way to 143. And we'll see if this Kiwi is going to continue to weaken. It's been kind of a surprise. So I'm seeing the strength in some of the other com dolls, especially the Aussie.
It's an Aussie strength. Yeah.
But the Aussie, I don't know if we're going to get much strength out of the Aussie either. So this is the bigger move. This is the bigger move after the rally earlier this summer in the spring. We should have gotten a move to the downside, and we should have been testing below. We should be trading below 150. 160 at least, and so we're not doing that. We're getting higher lows and higher highs. So I think we should be ready to see the Australian dollar follow in weakness. And I think what it is, it's going to be relative monetary policy, right? The RBA can't move on its interest rates. And I mean, relatively speaking, doesn't have to at 1.5%, while the rest of the world catches up with interest rate hikes. And I think that's what we're going to start to see. Now, this will be more difficult because I don't think that the Bank of England can move either until there's some more certainty around the Brexit talks. And so that's why this pair I haven't been trading maybe since August. I think I traded a breakdown. I got stopped out at break even. It's been real choppy, and it's just been hard to gather momentum in either direction. So I just haven't been participating in this. This is my shorter term move because I do think that it's bearish, but given the fundamental picture that's been developing just even in the last couple of days and weeks, we had the RBA earlier this week, so it's been clear to see that they're going to remain neutral. And I don't think that their next policy move would be an interest rate hike. So not that I think they're going to cut rates anytime soon either, but I don't think they'll be moving with the rest of the G10 or the G8 in terms of tightening monetary policy. And so that's going to see the Australian dollar just start to weaken. I think that's what we're also seeing with the Kiwi as well.
So perhaps after 82 or so in Aussie and it starts to pull back, this is when pound Aussie could start to perform.
Start to find some legs.
Yeah.
So
what a great interview.
Thank you.
How do you do it? You keep getting better and better every time I talk to you. I mean, your market eloquence. You're a great
conversationalist, Dale. We're just talking.
Yeah. Well, thanks, Lydia. And what a great trade you made. Send a card to the Bank of Canada and go running more often. And why don't you show people your site and the best way for them to get in touch with you?
Oh, sure. You can find me on Twitter at FaithMight. And I have some room to do classes. And so these are not the classes that you guys have, and there's some great ones out there. Mine is more one-on-one, and we just kind of enhance where you are and where you're at. Get you just a lot of my intermediate and more advanced students, they have their own systems, and it's more about just talking through psychology and trading and trade setups and just being true to your rules and just having someone to be accountable to. So cool. I still write, so I mean I always tweet it out, so just follow me on Twitter. And you can check out my site is FaithMight FX. I have some good tabs here, some recent thoughts on other markets like equities, bonds.
Yeah, as long as you bring it up. I think I saw a tweet that was unusual. You said for the first time in a while you're starting to become a little bit concerned about the equity markets. even if we get a new high here, is it starting to feel like more vulnerability is starting to creep in?
Yeah, and I say that with bullish anticipation.
Okay.
Because you know, it's been several years, and if you have money that you've been wanting to put to work in stocks, you've had to do it in individual stocks. I mean, there's been some dips that you can buy, that you've been able to buy, but you know, I'm a pure fib trader, and I want to see a fib move. And I do think we're starting to see some divergence at the highs here. I do think it's starting to weaken. I don't think a move into these fibs would be a horrible thing. I think it would be great opportunity. We'd have to keep an open mind about the context. You know, is it a technical move? Is it fundamentally driven? What are those fundamentals? What's going on? Is it war? What's happening, right? So we want to know what the context is. But I want to move into these fibs.
Okay.
And I think there'll be a lot of panic in the market around that. So it would be, you know, traders need to have their wits about themselves when we come into another correction. Haven't seen it. There's a lot of young traders who have never seen a bear market in equities, who've always been, you know, on this mantra of buying the dips. This is the biggest dip we've had back in end of 2015, and it turned out to be a monster rally after that, right? So
sure was. Sure was. And speaking of monsters, are you following or doing anything with crypto?
Oh yeah, I'm following crypto. Crypto. Again, it's another market you have to follow closely, just because the dips come and go in a flash, right? So you have to really be on top of it. But yeah, I mean, I've been lucky enough to have some Bitcoin, and I really mean little bit of Bitcoin and it was worth. I mean, it had to be worth fractions of pennies. Like, I really got that little Bitcoin, and it's worth like over $100 now. And I think you got to be foolish to think that this isn't real. And obviously it's healthy to have skepticism because it's new, but I definitely think cryptocurrencies are going to stay with us, and they're just going to evolve.
Let's hope they evolve, because can you imagine going grocery shopping with Bitcoin only? That what you can pay for changes in 5 minutes when you go from the milk. Oh, I could buy the milk. Oh no, I could buy milk and eggs now.
Everyone's watching at the counter, watching prices.
Yeah, great talking with you again, Lydia.
Thanks, Dale. You too. Thanks for having me.
All right, good hunting, and everyone thank Lydia for her time. Some great looks and excellent interview. And I mean it. You keep getting more and more eloquent every time I talk to you.
Thank you. I appreciate feedback. Thanks so much.
So there goes our trading warrior sister, Lydia. Follow her at Faith Might and her website. And hope everyone had a decent day. I still think cable might get a pullback. Just a quick look. Just in case you're doing anything here, I just want to show you what potential targets are. My look, just for the scalp. I'll be the presenter again. So, okay, so here's the 4 hour. So initially maybe 30, 40 here. And then this is going to be pretty important. Everyone see it. This was the wedge line that we've had a throw over. So this would also be a buy point. The only thing that would really change cable, and you know, Lydia's saying looking to be a buyer at 130, looking for higher levels. And some of the charts I saw from Lydia actually looked like head and shoulder bottoms that projected much higher cables. So these would be some of the targets. Tomorrow I'm going to have Trent Orr with us. Trent is responsible, if you guys don't know about it, that if you have an account with a broker that's on our rebate program, your trading can pay for your membership. And also to get your piggy banks ready to join Blake's Country Club sometime next week. And remember, you have to have been a member for 6 consecutive months or be a semi-annual or annual subscriber. and it's going to be a great place to hang out because right now I'm saying goodbye. And after we close the room here, you could go transition right in there to keep up with the action of what Blake is saying and everyone else in Blake's lounge. Okay, so more than that, everyone, hope maybe my lucky call in Euro Pound near the lows helped a few of you out. And most of all, don't just count your pips, count your blessings. I'm looking forward to wrapping up the week tomorrow. It doesn't feel like it was a holiday week, shortened week to me. So thank you, everyone. Record attendance today. Face is mushrooming, and I'm glad to be part of it, and thank you all for your support of the work that the team is doing, and they work hard. So see everyone tomorrow. Adios. Thank you, Steve Volge, for your analysis today. Blake, I hope you're killing it, and I'll see everyone tomorrow. Enjoy the end of the summer. It falls around the corner.